Right, morning. Good morning. Buenos dias. How's everybody doing today? Nice to see you guys. Morning, Jeffrey Dean. Good to have you guys. Welcome to the Education Room. Good morning, Abdul Aziz. Nice to see you in here. Long time no see. Ron, always appreciate a steaming cup of coffee. Good morning, Miss Jen. Marty, nice to have you. Erla, good to see you too. I love it. I got all the kids in here, making me happy. Guys, let's check news today. News is a little unconventional this week. There was an inauguration on Monday, and then the new President Trump is speaking at 11. That's a big one, because who knows what he's going to say and how the market's going to react. So forexfactory.com/calendar was nice enough to list that, let us know that he is going to be speaking. As a general rule of thumb, guys, I have no worries whatsoever about what's being said, but rather I look for these red boxes, these orange boxes, and I just make a decision to not trade into news. Sometimes it can create a crazy reaction that is absolutely unreadable, untradeable, and sometimes it's a dud like it was this morning, as Ron pointed out. But the reality is these boxes can create a lot of confusion and fights in the market, and you can choose not to trade into them. Normally, crude oil inventories is a Wednesday kind of news release, but because of the holiday, today we are seeing it on a Thursday, and it's a little late, but at 11 a.m. they're going to go through the crude oil inventories. And if you are a crude trader, guys, that can create a little indecision, a little bumpy-jumpy in there. So just knowing when news is, hey, good morning, Bob, be the man, gives you the opportunity to sidestep it, not get caught in it. We're going to do what we did yesterday, and what we're going to do tomorrow, and what we're going to do for the rest of my natural-born life is we're going to talk about high probability trend trade. This trade can be found, all the rules, right from the trading guide. Everything that I talk about really comes from this section right here. Here in the frequently asked questions, though, I'm going to go down to exactly what it is that I'm talking about. There's a section that talks about high probability trades, medium probability trades, and low probability trades. And I don't even know why you would take a low probability trade, but some people like them. We're going to talk about the high probability trade. And that's the trade that typically wins 70 to 80% of the time when you follow the rules. That is a trade that creates an awful lot of confidence from that win percentage. And this is a trade that its sole purpose in this room, guys, is to teach you how to read your charts. This is your first trade. This is your foundation trade. This isn't your only trade, guys. This is the trade that's going to set you up for long-term success with the software, because you're going to learn how to read your indicators and understand the advantages that they're giving you, or even better, understand when those advantages aren't present. The high probability trend trade, by teaching you to read those charts, you're also going to recognize, hey, good morning. Are you good now, Steve? Cool. Well, I guess so. If I'm asking, you say yes, you are. Guys, 90% of your day, each and every day, is spent reading indicators. There's a lot of patience in day trading. There's a lot of waiting. There's a lot of sitting on their hands. There's a lot of wishing that you were doing something when you're not, and that's okay. That's what video poker's for. But once you learn this one trade, once you give yourself that advantage of recognizing advantages, you will understand where the market is likely to continue. This becomes your entry for the highest probability trend trade initially. You will understand where the market is likely to go. This is going to help you a lot with profit targets. And you'll understand where the market is likely to stop. These are what we call termination conditions. And a termination condition is just a big line on a chart that says, hey, don't trade into me. I could create a bounce, guys. You'll be able to identify these things, and you'll be able to do it with only 3 rules. Let's get a laser pointer. Each rule for the high probability trend trade creates a unique advantage. And the recipe for a trade is the accumulation of those advantages, guys. A trade is nothing more than momentum, a clear path, and then finally an entry area. Rule number 1, strong trigger lines, gives you that advantage of momentum. Rule number 2, termination conditions false. Gives you that advantage of a clear path. And in those two alone, this is your core, basic, most important lesson that you're ever going to learn, because this is what's going to carry you on. Once you understand how to identify strong triggers, and once you're able to identify a termination condition, guys, you have everything you need to build a very consistent, profitable trading plan. Rule number 3 is entry area. This is the entry for the high probability trend trade. There are other entries that you can take. This is not the only trade once again, but we're focusing on this one trade because these two advantages, these are the ones. Hey, Dark Horse, great to see you in here. These first two advantages, this is the core, this is the foundation, this is what you're going to build your trading empire upon. So as we go through this day, especially if you're new with me, I don't want you to step into day one, your first week, and say, man, I'm going to be the best trader ever because I've got this software. I want you to say, let me learn how to read this software. And then once I can, nobody can take that away from you, and you will just keep moving forward. These 3 rules, it only takes 2 charts. That's it. There's more charts available. Guys, you could build a million combinations of charts. 2 charts is all you need in the beginning. The less you think about, the more likely you are to recognize the stuff you need to be thinking about. So, large chart leads the way. Large chart is the big chart. It's the slow chart. It's a very broad stroke of a brush, if you will. And it will show the overall opinion of the market. Your large chart, using the most current bar, will define the direction of the market. It'll let you know whether you should be looking for rules to be met to go up with the trend or to go down with the trend. The large chart will define momentum. You're going to recognize that through rule number 1, those strong trigger lines. And the large chart will let you know whether or not you have that clear path, whether or not you've reached one of those areas that could potentially stop the market. 2/3 of all the goodness happens on the large chart. So the reality is that if these are the 2 that you really need to focus on, guys, you really don't even have to get off the large chart for a couple days until you're comfortable with those. But once those rules are in place, once you have those 2 advantages, we're going to go get the 3rd advantage, and that's the advantage of the entry area, and that's the small chart. This small chart is nothing more than a refinement chart. It takes that very broad stroke of a brush, that 1 bar, and it breaks it down into 20 to 30 bars. You're going to see a retracement, a bounce, and a continuation, all on this small chart, but the large chart will never budge. It will stay constant. There's your momentum, there's your path. This refinement chart, this is where you're going to pinpoint where the market is most likely to continue with the trend. This is going to allow you to reduce risk dramatically. This is going to allow you to increase your profit potential, guys. And rule number 3 is the rule for the high probability trend trade. Rule number 3, as we discussed it in this first hour, it is nothing more than getting in where the market is most likely to continue. These 2 charts are best represented through this picture. Who are you trading with, guys? Who are you trading against? The large chart, I want you to think of it as a large crowd. Good morning, Miss Adriana. Nice to have you back. We got everyone coming back. I love it. Who are you trading with, or who are you trading against? The large chart, I want you to think of it as a large crowd. I want you to think of your large chart as the men and women that control the market, the men and women that have the money, the influence to create trends that we're going to follow, to establish momentum that we're going to utilize. And these are the same people that react at those key areas on a large chart, and that's where they're making decisions, whether it is to enter or exit, or whether the buyers and sellers, large crowds, just want to fight each other for a while. Large crowd leads the way. Let's just go with them. Let's be followers, right? And then there's a small crowd. Guys, give me a Y if you can hear me, please. Anybody? No sound? Yes, Ron has it. All right. Appreciate it. Sometimes the sound goes out on your end, guys. Let me send him a message there. And if the sound ever goes out in Discord, just go, hey Mark, I can't hear you. Is the sound on? And what I'll do is I'll ask the entire room, hey, can you guys hear me? And if you see a whole bunch of Y's coming through that chat box, it means that everybody else has sound. So, cool. And you usually just have to reboot and it'll work out, no worries. Guys, the small crowd is your small chart. And the small crowd, they fight the large crowd. I know, baby, the small crowd does that. The small crowd fights the large crowd. And these are the folks that still have a lot of money, that still have an awful lot of influence, and they create these little retracements. When the large crowd wants to go up, the small crowd wants to go down. And the great thing is that the small crowd typically fails 70 to 80% of the time in their endeavors. Your rule number 3 on this refinement chart pinpoints where their failure is most likely to happen, and that becomes your entry for the highest probability trend trade. So we're going to keep it pretty basic this morning, and there's a plan and a path, especially my new users. Take this to heart. There is a step-by-step path to becoming a confident trader, ASAP. Nexgen has been teaching men and women to day trade the markets for coming up on 30 years. And this has really been, since internet chat rooms were a thing, the path to getting to where you want to be. And it all begins with post in the room. I want you to feel comfortable dropping a picture in the room. I want you to feel comfortable taking a picture of what your chart read is, showing me your entries, showing me your exits, guys. This classroom is designed to give you feedback as you learn these indicators. This classroom is designed to make sure that your chart reads are right, to make sure that your entries are solid, to make sure that your management makes sense. And as we saw this morning, guys, once again, let me type in real quick. If you guys cannot hear me, reboot. Everybody, can you hear me? Is it just Organica, or am I just cutting out for everybody? So you guys can hear me. I just want to make sure. I don't want to lose anybody. So post your trades in the room, guys. And I love seeing your trades, and I love seeing your winners, and I love seeing your losers, because every time you post in the room, it's a private session with me. Bob B. the man, were you a Navy man? 5x5. I learned that from Gary. Army, right? So I guess just military. Appreciate it. Every time you post in my room, every time you tell me what you see on the chart, it's an opportunity for some feedback. It's a private session to go through what you see and what you did, and is there a way to do it better? And there will be times, and I just want to address this. Pete, thank you for this. There will be times when your trades are unconventional. And that's cool. That's all right. I love it. I love seeing your winners. But please bear in mind that this is an education room, and we are learning the Nexgen software. And if you're going way outside, tell me how you use the Nexgen software. For you guys that are a little more experienced, taking those trades that nobody on God's green earth is going to understand but you, because I can't give feedback on something that I don't understand, and I understand Nexgen. So do me that favor, please. Post them in the room, guys, and then track your performance in the spreadsheet Nexgen gives you. You're going to get a spreadsheet, and I'll drop it in right now. You got it when you downloaded the software. And this is your trade journal, it's your study guide, it's your plan builder. And we'll go through all the links together. But this is what you can expect over the next couple hours. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. We're going to break down those 3 rules individually. We're going to talk about how to study them. We're going to teach you what they mean to you in terms of advantages, how to recognize them, all that. You guys have the ability to simulate. You can practice. You can post pictures in the class. What I love to see is I love to see your chart read. I love to hear your chart read. Mark, this is what I saw. I saw this momentum and I saw this clear path, and this was my entry right here, and this is where I exited. And when you do this, it opens the door for any lessons that you need. You might tell me that you had strong triggers when you actually had weak triggers, and then we're just going to have a conversation about it. This is how you recognize strength, and this is how you avoid weakness. And the same thing with those termination conditions and even your entries and exits, we will talk about. And if there's a way for you to reduce risk, if there's a way for you to maximize that profit potential, you get that lesson through every picture that you post in the room. I think most importantly, you're going to know what you're doing right and what you're doing wrong. And then we will work together to embrace the good and correct the bad. So post in the room, simulate, practice. Don't wait until you think you're good at this to practice, because the more mistakes you make that we talk about, the more likely you are to avoid them. We're going to simplify. I'm going to give you a plan today. I'm going to drop it right in the room for you. It is a 2-trade plan. But we're only going to focus on the first trade of that plan for the first hour, and that's the high probability trend trade. And this is where the spreadsheet is going to come in for you. You have to know what looks you're going to commit to. One of the great things about the market is the market just moves in patterns. That's it. And there are patterns that have been proven, that have been back tested, that have been validated, verified, to win more than they lose. And that's exactly what the high probability trend trade is. It's just a pattern that's been proven to win more than it loses. We're learning that pattern right now. So you've got to learn the looks, and you've got to learn them so they become easy. So that's where the spreadsheet is going to pay dividends. There's 4 tabs. The first tab is a trade journal. What kind of trade did you take? And it's important to know what kind of trade you're taking. They all have names, and each trade has a different set of rules, and each trade really has a different set of management. So knowing what you're getting into, knowing what you're up against, what's in favor, it's going to help you understand how to manage it a lot. There's a section that's going to ask, did you have momentum? Did you have a clear path? That's your core. That's your foundation. Not every trade needs momentum and a clear path, but if you're always thinking about it in the beginning, you're really looking for those. And then the last section is just feedback from class. Every time you post in the room, we're going to celebrate every victory that I can find. We are going to try to correct any things that you could do better, that would help you. And then I've added into this how to annotate for the best feedback. That's that picture that we just saw. That one that reminds you that you should go through the 3 rules. You should go through those 2 core advantages on your large chart for every chart. Talk about them. Show me where you got in. Show me where you got out, so that we can really go through. And what you're going to find is that after about 5 pictures posted in my room, I'm going to start to recognize which way you lean, what kind of tendencies you have. Maybe you're just a rock star and everything you do is perfect, right from the get-go. And maybe you're like me, and you repeat the same error, whether it's into a termination condition, whether it's fighting momentum or trend. And what happens is in this feedback section, you're going to begin to see that pattern. And I'm going to begin to see that pattern. And we're going to start working together to fix that pattern, to be able to eliminate the challenges that you're having. The next tab is the basic rules. Everything in green is what it looks like to have your rules met. These charts are annotated. They talk about the look, what it means to you. And then it's important because if your goal is to not trade when the rules aren't met, the red is what it looks like when the rules aren't met. I'm going to give you a sheet that's going to let you add to what I've already done for you here to make you a chart reader even faster. There are the client trades. Almost 400 pictures of Nexgen users using the software, momentum, path, entry. Some of them are perfect high probability trend trades. Some of them are medium probability trades. They all belong to the clients, not Nexgen. They were nice enough to let me liberate them right out of the room. But what you'll find if you go back and study these is you're going to see a lot of different people in a lot of different time zones in different parts of the world doing the exact same thing, following this pattern, because it has been proven to win more than it loses. There's the entry sequence for longs and shorts. There is management. This will be on the plan that I give you as well. And then these are the very basics. And then all of these pictures are how you're going to grow. You're going to begin to recognize patterns when you're a chart reader. You're going to begin to manage differently when you're a chart reader. You're going to be able to find more opportunity when you're a chart reader. So the final tab is where you're going to build your plan with your chart reading. Initially, all your personal trade setup looks are probably going to be the high probability trend trade. They should all be the exact same look with the best chance of success. But you're going to grow outside of that. I know you're going to grow outside of that. So start taking pictures when you start seeing things. As you begin to change your management plan, make sure that you're taking multiple pictures and talking about it. Give me 1 second. Something with Discord. So guys, there's a little recipe. So if you Control-Alt-Delete and bring up the task manager, hopefully David's watching. Here we go. That should be helpful. Hopefully, we can get him back in, get him listening. So you guys are going to build your own plan here. You're going to start to go outside of that high probability trend trade because of your ability to read the indicators. So we're going to get going here. We're going to talk about it. The first hour is just rules, guys. That's all it is. It's just rules. And by the end of the first hour, by the end of our little 101, let's figure out what we're doing session, you will have everything that you need to be successful with the software. Nexgen gives you everything that you need to be successful. The only thing that you'll need to do is practice. You'll need to practice until it becomes easy. So let's get going. What am I looking at? I added this to this PowerPoint. You will get this PowerPoint, by the way. What am I looking at? Guys, these are the indicators that you're going to see on your chart. Whether it is a large chart or a small chart, these are the things that you're going to see. You're going to see triggers and you're going to see areas. Both charts have them. So we'll start with triggers because triggers give us our first rule anyway. So there are small triggers, which are solid lines. It takes two lines to make the small triggers. The dashed lines are the large triggers. So you're going to hear small versus large when it comes to momentum. You're going to hear trigger lines versus areas when it comes to termination conditions. Just know that the solid ones are fast. They're the small triggers. The dashed ones are large. They're the slower triggers. And they're going to look exactly the same on any time frame. So we're just naming them. Small triggers, large triggers, and then areas. This is your roadmap. This is exactly what they're called when you see them on a chart. There is a divergence high line. There's a divergence low line. There's Fibonacci resistance. There's Fibonacci support. There's a mid band. There's yellow 1-to-1s, guys. This is your roadmap. So by knowing what these look like and what they're called, you're going to be able to follow along. And you're going to understand when I say price reaches Fibonacci resistance, you know that I mean that price reached a red line. Or if I say price traded all the way down to a divergence low, you're going to know that I mean that cyan line that's coming from a pivot. So that's your roadmap. You will get this. If you have questions about how they're created, you're going to want to send John Novak an email. He is the brains. I'm the pattern reader. So 3 rules. And we're going to start on rule number 1 because that always feels like a great place to start. Rule number 1 says that the large chart, the big chart, the slow chart, the large crowd must give you strong trigger lines. Remember, your large chart leads the way. Your large chart defines direction, momentum, and areas. So strong trigger lines are going to do 2 things for you. That most current bar, the first bar printing on that large chart, The background is going to let you know which direction the market is trending. Because the trend is your friend. Everybody's heard it. So if the background is green, the market is trending up. And we're looking for rules to be met for high probability trend trades long. If the background is red, the market is trending down. We're looking for rules to be met for high probability trend trades short. There's a lot of cheat codes in the colors with these things, guys, because in an uptrend, when the background is green, the only way you can ever have strong trigger lines is if both your small triggers and your large triggers are green as well. Or in a downtrend, if your small triggers and your large triggers are both red as well. If colors don't match, whether it's triggers with one another or triggers with the background, you don't have strong triggers. And rule number one is not met. But when you do have strong triggers, your small triggers are up and above the large triggers, and your large triggers are wide and they're angled in the direction of the trend, and there is space created between the two. And I like you to think about scissors that are open. When those scissors are open, when the space is present, the odds are favorable for the market to continue down. And in a downtrend, small's below the large, large are wide. Once again, when the scissors open, when the space is present between the two trigger lines, guys, the odds are favorable for the market to continue down. So we actually call strong triggers odds favorable momentum. And you're going to see it annotated on charts, OFM. And when I have odds favorable momentum up or down, the market is more likely, not guaranteed, but more likely to continue in the direction of the trend. Very often, these strong trigger lines are going to let you know that areas have the potential to break. These strong trigger lines cover a lot of mistakes that new users tend to make. And when I have strong triggers up or down, I'm using that refinement chart to buy or sell, Fibonacci support or resistance on a smaller, faster chart. That one bar on the large chart is going to look like it sprouts a tail. Your rules actually have you pinpointing where that tail is most likely to form. So if you see strong triggers and you see one of these tails, potentially there was an entry for a high probability trend trade there. So strong triggers happens all day, happens both directions. It's not difficult to recognize. Separation, 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 and you can see that the market pushes when that strength is present. Is everybody good with that? Can you give me a why? If you're comfortable with the idea that open scissors means strength, guys, this is such a valuable lesson. Well, strength goes away, ladies and gentlemen. It always has, it always will, right? When the small triggers work their way back inside of the large triggers, when they are enveloped inside of those two lines of the large triggers, guys, this is a weakness of the large triggers. This is a look that we associate with the phrase, anything can happen up or down. When you have weakness, this is where you begin to see retracements, maybe from the middle of nowhere. This is the look that key Fibonacci areas are more likely to hold and reverse the market without that momentum. And guys, language is important to me. And I want you to see just how a little word association with a look is going to keep you focused on the best of the best. This is strong, and the odds are favorable. I like that if I'm going to invest my money. This is weak, and anything can happen. And once again, I'm a huge fan of avoiding this look because the likelihood of me getting paid goes down dramatically. So once again, this is crude oil. You can see those weak triggers, and it's right at a key area. And sure enough, the market reverses, and the strength pushes it up, and strength pushes it down. When we get into rule number 2, you're going to understand why momentum is only one of 3 rules. Strength pushes up, strength pushes down. And guys, you can go back and take pictures all day long. Weakness right at an area. There's your reversal. Small triggers keep working their way back towards the large, right into an area, and it reverses. So strong triggers lead the way, guys. Strong triggers are the battle cry. Odds favorable momentum is exactly what we want to give us that advantage of momentum, to let us know that we are 1/3 of the way there. Once I have momentum, I've got to make sure that termination is false. I hate the way that's worded. I'm going to fix that one day. When I don't have a termination condition, I have room to my profit targets. I have a clear path. What's a termination condition? So here's the Nexgen definition. A termination condition is a Fibonacci-based indicator that may reverse the market, and it's based on a comparison of the Fibonacci area and the trigger line strength and location. Here's my definition. The termination condition can be a horizontal line on a large chart. Bob, I'm about to go over what creates a strong top or bottom. When I do that, we'll go back and we'll see. Cool? Overachiever, you're getting ahead of me. I love that. Guys, the easiest way to think of termination conditions, it's a horizontal line on your large chart, and these lines are where decisions are being made by the large crowd. Those lines can be Fibonacci support or resistance. Those lines can be yellow 1-to-1, cyan divergence lows, magenta divergence highs. These are the lines on the large chart that we're going to use a simple equation to know what the likelihood is. There's also any three divergences in the same area. We're going to see that as we go look for entries. And then a large chart midband if the large triggers are a full bar away. And that is the only time that the large chart midband will ever behave. So we kind of put that in its own little section. Resistance, support. Guys, these are the areas that can stop the market. These are the areas where decisions are made. And if decisions are made at these key areas, it's important to let the market, to let price get to that area to set off the decision-making process. So the first part in identifying a termination condition is price reaches the area. The buyers push it up, the sellers push it down. When price reaches the area, we're done with price. No more with price. Now it's the trigger's job to let us know what's happening. So to define a termination condition, if price reaches resistance, I'm going to ask myself, where are my triggers? Every time I hit a line, where are my triggers? And if my triggers remain below resistance, this is a termination condition. Rule number 2 is not met, and there are no more trades into that area per the rules. This is an area where the buyers may exit all their positions and the sellers take over. This is an area that could just create an untradeable bounce. This is an area where fights can happen. And this is an area that could create a full reversal, meaning those large triggers go from green to red. Again, the triggers are letting me know if a no triggers through termination, no triggers, not the small, not the large, get through that area of resistance and the market reverses, then we have our strong top that Bob was talking about. And a strong top means that the decisions made by the opposing force were so impactful right at that area that they changed the entire direction of the market. That's the precursor for the highest probability trend trade you can take. That is rule number 1 for at least 3 trades that I'm thinking of right now in my head. So price reaches, let's let them make their decisions. This is your big red flag that says pause, wait. You don't have to guess. You don't have to predict. Simply wait to see what the reaction is. It's either going to be a reversal or it's going to break. Price comes down from that reversal. Sellers are in charge. They reach Fibonacci support. Where are my triggers? My triggers remain above support. Support's a termination condition. There may be an untradeable bounce. There might be a fight. There might be a reversal. It could break. I never know. I will never be able to predict what the market is going to do. All I can do is trade a pattern that has been proven to win more than it loses, guys. And this is not a pattern that wins more than it loses. That's why rule number 2 is in place. So if a no triggers through termination condition reverses the market, well, then I have a strong top. So let's go look at some of those termination conditions. Fibonacci resistance, even with odds favorable momentum, stops the market cold. No trades into it, and it keeps you safe. It keeps you out of a loser, but it's not a strong top because it doesn't reverse the market. Does that make sense, Bob? Here the triggers get through, but with that weakness, it reverses anyway. Not a strong top because it's not a termination that reversed the market. All that momentum pushes down directly into Fibonacci support, directly into yellow 1-to-1s, and the triggers can't break. Termination condition once again. Even with the momentum, no reason to take that trade. You would have lost. And when it reverses the market, Bob, there's your strong bottom. No triggers through, reverses, that's your strong bottom. Up here, smalls and large reach resistance. Reverses the market, but since your small triggers got through, it's not a strong top. The recipe for a strong top means that none of my triggers break through that area, that moving average couldn't push beyond before the reversal. So you're going to see strong tops and bottoms all day. There's another strong bottom, and then there's a weak top, and there's a strong bottom, and there's a strong top. All day long, you're going to see these things, guys. The easiest trades you'll ever take are from one Fibonacci area to get to the next. And that's why rule number 2 comes in play. We don't want to take that long into a line that may stop the market. We're going to find our opportunities in between those fibs with all that momentum when the path is clear. So that's what it looks like when the market stops, when those key areas stop the market. This is what it looks like when they break, because they break all day long. Otherwise, we'd be trapped in an area. So number 1, price reaches resistance. Triggers are still below. This is a termination condition. Let's wait and see what the reaction is, right? I'm no good at guessing games. I never have been. I don't need to guess when my money is involved. Number 2 is the small smash through the area, but the large triggers are still below. And guys, this area has the potential to break because of the momentum in the move. But it's only potential. It's not broken yet. The path isn't clear. But with that level of momentum, guys, there will be opportunities. This will be your first medium probability trade. This is the second trade that is going to be on the plan that I give you. And when the small smash through, but the large lag behind with odds favorable momentum, you may find an opportunity, but it will have to be managed a little more assertively because the potential is only there. It's not broken. The area is not considered broken until the small triggers and the large triggers break above that area of resistance. Now that area is behaving as support, and now my path is clear until the next area is reached. Guys, rule number 2 is met. So right here, I have momentum, and now I have a clear path. I'm going to look for an entry. I'm going to look for an opportunity to capitalize on that high probability trend trade. Market goes down too. Price reaches Fibonacci support. The triggers are above. Guys, wait for the reaction. It could break. It could hold. You'll never know. But the recipe never changes. Price reaches, triggers above, no trades, relax. Smalls and large get below, supports now resistance, the path is clear until you reach the next line. And then of course there's the transition. When the small smash through but the large are still above, with that odds favorable momentum, it has the potential to break. But it's not broken until the small and large get below. And let's go back and look at that live market again because I want you to see. Resistance had the potential to break, but it didn't. These areas had the potential to break, but they didn't. Had the potential, did not. Had the potential, did not. And guys, you're going to see this. Had the potential, big retracement. Had the potential, reversed. It's only potential. So it's really a two-part process. Momentum is awesome. A clear path is awesome. But momentum and a clear path, guys, that's the recipe for looking for entries. There will be times, this bums out the new users, there will be times when your path isn't clear because areas are stacked a bit, guys. Fibonacci areas are thousands upon thousands of calculations based on every up and down in the market. And they're sorted and weighed, and they come out as these blue and red lines, and these blue and red lines are crazy powerful. But sometimes you get a few of them in the same area. This is 90% of your day, guys. This is the patience piece. This is why rule number 2 is the most broken rule, because a lot of us don't like to wait for the best trade. We want to be in the trade now because I'm not making money if I'm doing nothing. But the truth is, you're not giving money away by doing the wrong thing. So 90% of your day, you're just waiting, and it's okay to do nothing. And I want you to come to terms with that. Find a distraction if you need to. The futures markets trade billions every day. It takes $400 a day to put 6 figures in your trading account at the end of the year. $400 a day is over $100,000 in profits every year in a market that trades billions daily. So learn how to be patient. Large chart led the way for us, guys. The large chart said that we had momentum. We had strong triggers, there was separation, the scissors were open, the odds were favorable for the market to continue in the direction of the trend. Rule number 2 was true. We had no termination conditions, guys. There's nothing in the way. I have room to my profit targets. I have a clear path. I have 66% of my advantages, and they came from the most current bar on the large chart. I'm done with the large chart now. My advantages are in place, and now I'm going to go to a small chart, a faster chart. And we're going to find an entry. But before we do, this was one of the termination conditions in the lineup. 3 divergences in the same price range, guys. Remember that the small chart refines the large chart. Inside of one bar on the large chart, you might see all of this on the small chart. So the small chart is going to help you see change that you can't see happening on the large chart. And 3 divergences on the small charts. 3 cyan lines from a low coming off a pivot. 3 magenta lines coming off of pivots from a high. Divergence lets me know there was a loss of momentum in that move. So 3 losses of momentum in the same price range may terminate the trend. Rule number 2 isn't met. The path is not clear. So 1 divergence, I'll still take the trade if the rules are met. 2 doesn't faze me. 3, no more short trades. I'm not gonna give it a shot because it may push up higher. Same is true the other direction. Guys, these 3 divergences become even more powerful when the small triggers work their way inside of the large triggers, and even more powerful still if that 3rd divergence is higher than the previous from a low or lower than the previous from a high. So if I'm looking at my large chart and everything is perfect and I go to the small chart and I see that, I have to pump the brakes and say, all right, let me get to the other side of those divergences. But if they're not there, this is where your precision comes in, guys. This is where you're going to take those first 2 advantages and you're going to find your entry. And your entry will be so specific and so precise that you will use a limit order to buy or sell a pullback, that little shove from the small crowd. And you're going to have that limit order waiting at an area, at a fib, at a mid-band, at a yellow 1-to-1. But we want those areas to be inside of triggers, guys, because there is this gospel truth in the market that price returns to large triggers. And I want you to see this. Price pulls away from the large triggers and it pulls back, and it pulls away and it pulls back, and it repeats this process all day long. So on your entry chart, there's actually 2 sets of large triggers. You won't see this on your large chart. You'll see your 5-1 large triggers. They're smooth and they're used versus the small triggers to establish momentum. And then you're going to see that other set, and this one almost looks like it's stepped a little bit. And these are what we call synthetic triggers. And synthetic triggers are nothing more than the large chart large triggers. But by putting them on the small chart, we can see where price is most likely to return. It's most likely to return to the large triggers on the small chart as well as the large triggers on the large chart. So your trigger lines will define the zone where the retracement is most likely to happen. So your highest chance of success, your least amount of risk, your greatest opportunity for precision comes from what we call favorable large triggers. And when I have favorable large triggers, it means that both the large triggers and the synthetic triggers are overlapping, like 2 snakes riding piggyback, because now the retracement is most likely to occur in the exact same spot. If they're split, that box is going to be pretty big. If they're favorable one on top of the other, there's not a lot of space there to put an area, to put a fib, to put a midband, to put a yellow 1-to-1 inside of that retracement zone. So Favorable large triggers is always the best of the best, but it doesn't necessarily happen every time. You will see this look. We'll talk about how to take advantage when the entry isn't perfect. But let's define an entry. Once the rules are met on the large chart, you hear me say that a lot throughout the day. When the large chart says look for an entry, when the large chart rules are met, when 2/3 of your advantages are in place, guys, you're going to turn your attention to a smaller, faster chart to find your entry. Everything is going to be moving up if it's an uptrend, if that momentum is there, if the path is clear. And you can look, you can say, oh, okay, there's a mid-band and it's kind of at triggers, and there's triggers where the retracement may happen. But we need a pullback. We need the small crowd to fight. And that's waiting for a reversal bar. This reversal bar is not your entry. Once you get your reversal bar, you know the fight is on. The pullback has begun, and we know that price tends to return to the large triggers. So I have large triggers and synthetic triggers, and from the highest line of the triggers, whether it is large or synthetic, to the lowest line of the triggers, whether it is large or synthetic, guys, this is where the market's most likely to retrace. This is where that price is most likely to return. And the tighter they are one on top of the other, the smaller that area becomes. This will help with accuracy. Once I define where the retracement is most likely to occur, I need an area. Areas are what create the bounce typically. Areas are like the brick walls, price is like the tennis ball, and when they're inside of the retracement zone, guys, this is the best of the best. So areas can be fibs, mid-bands, or yellow 1-to-1s. That's consistent always. One is not more important than the other. Don't get hell-bent on insisting on a mid-band. It's a fib, it's a mid-band, it's a yellow 1-to-1, but once again, there's that big word, inside of triggers. And this box goes from the highest area inside of the triggers to the lowest area inside of the triggers. And this is where the market is most likely to bounce and continue with the trend in the direction from the large chart. This is where the small crowd is most likely to fail. And it's a refinement process. Defining the retracement, and look at how much smaller it is for the potential bounce. Your job, once you identify the areas inside of triggers, is to activate a limit order, to right-click on that chart and say, all right, small crowd, come get me. And you're going to activate it a couple ticks above that highest point of support. Because remember that your large chart has the best momentum look that you could ever hope for. Your large chart has nothing in the way to create a bounce. We're not going to expect the small crowd to get a lot of work done. So a couple ticks above the highest point of support inside of favorable large triggers, and you will teach yourself to remove any lines that aren't inside of triggers from the equation. If the retracement happens, if they reach your order, you're in a long position, guys. You've just bought, and you have the advantage of a market that's likely to continue in the direction of the trend via strong triggers. You have a market that has absolutely nothing in the way as momentum pushes it up, and you have the advantage of having entered exactly where the market is most likely to continue, exactly where the small crowd is most likely to fail. Guys, this is the precision that rule number 3 gives you when the advantages are in place. If those advantages aren't in place, this is going to be less likely to work. So you've got to learn these in order. You need to understand that when I have momentum, when the path is clear, I'm going to turn my attention to the small chart. I'm going to wait for the reversal bar. The reversal bar signals the beginning of the pullback. Once I get the reversal bar, I'm going to identify my large and synthetics. This is where the retracement is most likely to happen, where those price bars are most likely to return. And then I'm going to build the window of opportunity. I love that, window of opportunity. From the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers, I have pinpointed right where the market is most likely to continue with that trend. I have defined where the small crowd is most likely to fail if they're going to fail. And guys, my limit order, your limit order goes right above that highest point, a couple ticks above. And in futures markets, you can make money both directions. So when the rules are met on the large chart, you're going to wait for a reversal bar on that small chart. You're going to find your trigger lines. That's where the price is most likely to retrace. You're going to find the areas inside of those trigger lines. That's where it's most likely to bounce. Your job is to trust this pattern to the point where you can put a limit order 2 ticks below that lowest point of resistance when your rules are met, and just let the small crowd do their thing. And they're either going to get you or they're not. And you're going to learn to ignore anything beyond that retracement zone, anything beyond that bounce zone. These lines are not a part of the equation. These are actually where the market should not go, which is going to work its way into management. There's this idea that mature traders, that experienced traders, that successful traders manage their risk before they ever manage their profits. Guys, you manage your risk right out of the gates by having momentum and choosing to trade with that direction and that momentum. You manage your risk by not trading into areas that could stop the market. You manage your risk by entering where the market is most likely to continue. And by defining where the market is most likely to continue, you know precisely where the market should not go. It should not go beyond those trigger lines if this is going to be part of that 70 to 80%. It shouldn't blow through the areas inside of those trigger lines if this is going to be part of that 70 to 80%. But we all know that anything that wins 70 to 80% is obligated to lose 20 to 30%, which means we're going to manage our risk by putting a stop 4 to 5 ticks above those trigger lines for a short, below those trigger lines for a long. And if the small crowd has it in them to go through all those things in our favor, well, then our advantage is gone, and that's where we're going to exit. And this is a cost of doing business and a very normal part of a positive equity curve, having your stops getting hit every now and then. But with all those advantages, with all that rule following, you're more likely to get a reversal bar, a confirmation bar in the direction of your trend. And this confirmation bar is confirming that momentum, path, and entry are going the direction you expected, you hoped, you wished, you wanted them to go. And you'll be able to reduce risk 2 ticks above that reversal bar, because that's the new point where the market should not go. And you'll be able to put it 2 ticks below that reversal bar, because that's the new point where the market should not go. And guys, it doesn't guarantee a winner. The small crowd may just re-up and push down, but it's not uncommon to see Nexgen users with these amazing entries giving up maybe 2 to 3 ticks instead of 12 to 14, because that confirmation bar let them know that the buyers gave it their best shot, and they still fail now and then. So that's the high probability trend trade, guys. That's finding your entries. I try to be very thorough, because once you understand momentum, once you can identify the path, guys, you have everything you need to find more trades. You'll see some of them in the room today. You'll see trades taken that all they have going for them is momentum and path, and then this crazy little jump in and quick profits. I love it. But this is your core. This is your base. And we talked about how these tails are the pullbacks. I want you to see why pullbacks to areas are so vital. The space from the top of the bar, and that's where the beginning of the pullback will be. It's only about 8 ticks to get to trouble. It's only about $80 before you hit something that could stop the market. If you're entering at the areas inside of those triggers, that profit potential triples. And now you're looking at like $300 worth of potential profit. And you're looking at a lot less risk. So you've got to go back and you've got to study this look, guys. This is your pattern, which means that if you go to that large chart and you see momentum and path and any sign of a tail, go ahead and circle it and see what it looked like on a smaller, faster chart. If you get one of those looks, maybe with the potential to break, and I'm looking to see if we have one. It looks like crude's been bouncing a little bit. Here we go. The potential to break as everything's pushing down even. Circle a tail. And then just take a minute, open up your small chart. That particular tail, that was your first circle. The rules are met, but it didn't quite make the area inside of triggers. Guys, you probably didn't get a trade there if you're following rules. Back it up a little bit. And there may be opportunities in there, but I'm looking for the most obvious ones. There's another pullback, and it pulls back in the triggers, and maybe it didn't make it, and maybe you weren't able to catch that trade, and that's okay. I'm trying to remember from yesterday. There's another tail with the potential to break, and that was a lot of dancing. We talked about fights happen at fibs. There it is. Nothing clear about that. 90% of your day, guys. 90% of your day is waiting for things to be perfect. 90% of your day is waiting for the best of the best. There's that potential to break right now with momentum, and there's your pullback to a mid band right inside of triggers. But that area only has the potential, and that area could break, but your small chart's already showing you a loss of momentum, and on those potential to breaks, that's one of the biggest killers, and that's actually on the plan that I'm going to give you. So I'm going to start handing you some stuff. I promised you everything you need, so I'm going to drop this zip file in there right now. And this zip file is everything you need, and everything I'm about to go over is inside of that file. All you have to do is download it. The first one is Chart Reading 101, guys. In order to get to where you want to be, you're going to have to be able to recognize some looks and patterns. Yeah, that's right now. That's the live market, Mark. This area has the potential to break, but over here it has weak triggers and it has divergence. Two visuals that there's a loss of momentum. Does that make sense? So let me show you how talking about advantages works for you. You know you have momentum on the large chart, but you don't have a clear path because the area is not broken. You do have an entry area. You've got 2/3 of all the goodness. This is what we call a medium probability trade. Because one of the things about divergence is the loss of momentum. So the small crowd is already starting to give up momentum. And it just has momentum. And weak triggers is a loss of momentum. I don't know, what word should we make it? So now you just got mint in an entry area. And it's medium probability, and you have to know what you're up against. You have to say, all right, it has the potential, but I'm losing momentum. If I enter at the area inside of triggers and look how it bounced right off of it, I may have to manage assertively at that area that I'm hoping breaks. That's the idea behind a medium probability trade, which is why you have to be able to speak to yourself in terms of advantages to know what you're up against or what's working for you so you know just how aggressively it needs to be managed. The easiest way to do that, guys, is to take pictures. Taking trades is awesome. Post them in the room. Let's talk about them. But outside of taking trades, guys, take pictures, especially as a brand new user. Go take 25 pictures of strong triggers. And I'm telling you right now, if I'm using a large chart, watch this. If I'm using a large chart, strong triggers, strong triggers, strong triggers. There's 3 pictures. Strong, strong, strong. I'm up to 6. Strong, 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 strong. That's like 12, 13 pictures instantly. And then take 25 pictures of weakness. There it is. Look at the reversal. They returned. Look at the reversal. There's weakness. Look at the reversal. Weakness at a fib. Look at the reversal. Guys, the idea is that if you take a little time and you take a few pictures, you're never going to mess up the difference between strong and weak. You're always going to know whether you have that advantage or not. You're never going to mess up a clear path and termination conditions. You're always going to know the difference. You may choose to trade without the advantage, but it won't be because you don't know what it is. Same is true with entries, guys, and that's what the second tab is for. I've done a lot of work for you. I've got 57 pictures of strong triggers, almost 80, 85 pictures of termination conditions, weak triggers, clear path entries. And the one thing is it's not just about taking pictures, guys. It's annotating. Don't just take a picture and hope it sticks. Create that little combination between brain and what you see and what it means. So the arrow is to those open scissors. Smalls are green, large are green, background is green. Smalls above large, both wide and up, space between strong triggers, odds favorable, momentum. Rule number 1 met. Taking the time to type that. Taking the time to type out why it's strong, what makes it strong, what does it mean to me? Guys, that's what's going to cement these lessons. Do it for each picture. You'll get to where you want to be. And then ultimately, you're going to piece these together to create a trade. Eventually, you're going to take those strong triggers and then you're going to couple them with that clear path and you're going to find that great entry, and that becomes your high probability trend trade. It's nothing more than 3 advantages. So you will get a copy of that. You're also going to get the high probability trend trade checklist. I don't expect anybody brand new to be able to go take those pictures with confidence, so I've given you a cheat sheet. This checklist is designed to get you into the highest probability trend trade, guys. There's your checklist, yes or no. The first one is the market coming from a strong top or bottom? It's not mandatory. It's not one of the 3 rules, but it does give you the highest probability trend trade ever. Let me make this a little bigger for you. And it's a termination condition that reverses the market. And when your rules are met for the high probability trend trade, you should have warm fuzzies after a strong top or bottom. This is momentum. This is always momentum. This is weakness. This is always weakness. This will always be a termination condition. Price reaches the area, not one trigger through. Absolutely no trades into that area. It's not a clear path. This will always be a clear path. Small and large through. Next area is not hit. And then there is the transition, and this is going to be your second trade, that potential to break. But you've got to be able to say to yourself out loud, this is only the potential to break. This is not a clear path. I may have to manage assertively. And you will have no questions about where your entries come from, where your limit order goes, and what areas you need to learn how to ignore, because that's where your stop goes. And then the second page is that high probability trend trade checklist. And the high probability trend trade checklist can be printed out, can be laminated. You can use a dry erase marker. And all you're doing is you're policing yourself every time you look to take one of these trades. Do I have this? If I have that, then I go to the next rule. If I have that, then I go to the next rule. It's a flow chart. If I have that, then I go to the next rule. Guys, these are the same things that you can write on every chart, every trade you take. And you will never ask, hey Mark, was this a good entry? You can say, hey Mark, check it out. I had momentum, nothing in the way, in an area inside of favorable large triggers. You're damn right this was a good entry, no matter what the result was. So you're going to get that as well. And then the one thing, fail to plan, plan to fail, guys. You've got to have a plan. Allowing your emotions or your gut feelings to be your compass is rarely advantageous. You have to have a plan, and this plan is going to be given to you. This plan has 2 trades on it. It has the high probability trend trade, and then it also has the medium probability, that potential to break trade. The high probability trend trade, guys, this is your first trade. This is the one that teaches you to read your indicators so that you can successfully execute the second trade on this plan. This plan is designed to optimize your chances of success with the high probability trend trade. When I say that, what I mean is that this is the best way to take the high probability trend trade. This is the highest probability of success way to take this trade. It's not the only way, but it is the best way. And then through simulation, study, class feedback, and continuous practice, you will craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, when you can read your indicators, when you can identify advantages, when you begin to recognize patterns, your plan is going to blow up. It's going to change just the same way you did. But until you have that ability, it's okay to keep it simple, guys. It's okay to keep it focused. I have had men and women get funded in those prop firms, get live accounts that they can pull money from inside of their first 30 days with Nexgen by following a simple plan. This plan. Your simple plan for consistency, guys, it starts with don't fight the large chart. Everything about what we've just talked about is designed to give you the highest chance of success. Don't fight the large chart. If the trend is up, go up. Don't go down. Avoidable errors. Don't fight the momentum created on the large chart. Don't trade into those termination conditions on the large chart, guys. They're all easy to avoid if you commit to following rules. And then you've got to define your entry. Guys, your entry creates a manageable trade as well. It's that final advantage, putting you in the market where it's most likely to continue. I can tell you from my experience of teaching this class since the time I created this KISS plan, I've never had anybody mark yes to all 4 of these and do worse than 70% in their trading. Never. I've had engineers back test it over the course of like 400 days. And his was 82.3%. We say 70 to 80 because I want you to know you're going to make mistakes. So, guys, this is your entry. It's your entry. It belongs to you. It's not my entry. These are your charts, your trading, your money. Define your entry. And then you're going to manage it. Management is where the adrenaline kicks up, guys. It's easy to get into the market all willy-nilly. It really is. Management is where you got to focus a little bit. Management's where you have something to lose in your brain. And guys, management should be just as mechanical. Very if-then, very flowcharty. In the very beginning while you're learning to read your indicators, and then once you can read your indicators efficiently and effectively, you'll craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, your management plan is based on 2 contract trades. 2 contracts going into the market. And your management plan is dependent on your ability to enter the market where the market is most likely to continue. So if I enter at the area inside of favorable large triggers, then my stop is 4 to 5 ticks below the lowest trigger line where the market should not go. And guys, this is it. This is the beginning of your plan. And once you're in, once that stop's in place, there's nothing to do. There's no reason to move your stops. Just let it play out. Especially as a new user, just let it play out. You're either going to get stopped out. You will take a loser 20 to 30% of the time with this methodology. It's okay. It's a cost of doing business. It's like paying rent in your storefront. It's just a part of it. But with all those advantages, more often than not, guys, you're probably going to get that reversal bar in the direction of the trend. You're going to get that confirmation bar confirming that the market is going up with momentum and path, confirming that it's bouncing from the best to the best spot, right? Once I get this reversal bar, if a reversal bar prints in the direction of my trade, then my new stop is 2 ticks below that bar or above it for a short trade. And then once again, sitting on my hands, warming my fingers, I'm not going to do anything. One of 2 things are going to happen. It's either going to come and stop me out for a small loss, whatever, no big deal, doesn't faze me. I'm focusing on the process. I'm learning this methodology as a brand new user. Let it play out. And if it doesn't stop me out, it's going to go to my first target. This KISS plan is designed to not only teach you how to move your stops, but it's designed to get you paid. And it's designed to get you comfortable with taking profits. Because a lot of people let the trades go up, their greed kicks in, and then it all comes against them because they can't read indicators yet. This plan is designed to get money in the account ASAP, guys. And your first target is only $100 away from your entry. That's it. 8 ticks in the S&P. It is 10 ticks in crude oil. And once that first target is hit, you're in, you're paid, it's in the account. That contract is gone. And you're going to move your stop to break even because break even should give you the courage to hold for the second target. You're going to be tempted to move it up really tight. I don't want to give any back. Guys, you got to give the market room to breathe. This is a small chart. And with absolutely nothing to lose, it's either going to hit that break even, no big deal, I still made $100, or it's going to go to my second target. And my second target is only $200 away from my great entry. Which means that with a very mechanical management plan on the perfect entry, this is a $300 trade. Do you see that spike right there? Any arbitrary stop movement away from break even, you got stopped out before you realized profits. I see this a lot. This is a tiny little chart, guys. Let it do its tiny little chart stuff. Stick to the plan, let it play out. That is the most important thing that you can do. But this one trade, that one entry, guys, that was a $300 trade. If that's the best you do every day, 252 trading days a year, $300, 75 grand in your trading account. Throw in an extra one with that break even, you're in six figures. I told you guys, $400 a day, that's it, six figures. $200 a contract. You'll see that potential. By the second or third day you're with me, you'll know that it's possible. You're just going to have to learn how to do it. That's what I'm here for, guys, to give you all that feedback. And one of the things that you need to know before you go live is why you will enter and why you will exit a trade. You have to know both of these. You have to know exactly why you're doing it. Did you do that in a PowerPoint, Dark Horse? Yeah, so do me a favor. I love a PowerPoint. I'm a big fan of PowerPoints. It's not very conducive for this room because it means I've got to download, I've got to go to folders, I've got to open, I got to go through my security. If you will post those individual pictures, and let me, before you do that, I'm going to go over something. No worries. Here, give me a second and I'll show you exactly, because you probably followed this recipe to the T. Pre-trade pictures, right? To make sure that you're following rules. Those are great. I don't really need to see those. During the trade, as you work on management, those are awesome. I don't need to see those. After the trade, I need to see this picture. I need to see really one picture that shows your large chart and your small chart. I need to see one picture that shows me the momentum and the path and talks about entry and exit. And Dark Horse, if you give me that one picture, I'll have everything that I need. I love that you took 5 pictures. I typically take 5 or 6 pictures every trade that I take, but it's that last one that shows from entry to exit and all that good stuff. That's the one that gives me everything I need to give you the absolute best feedback. Gold star for putting together a PowerPoint, though. I love that. And then there's another picture, and this is just for all you new users. When your rules aren't met, take a picture. Take a picture. Maybe you had a termination condition, you didn't want to trade into it. Take that picture. Drop it in the room and let's talk about it. And I ask you guys to do that because very often people post a picture in the room and they say, hey, no trade. I didn't have a trade here. This wasn't a trade for me. And we'll just do this one right here. This wasn't a trade for me because, Mark, check it out. I saw those 1-to-1s and I didn't want to trade into them. And then we talk about how those 1-to-1s, price never reached them. They're not even on the path yet. Those are a target. Or sometimes you'll say, well, there was a divergence, one divergence, and I didn't want to take that trade. And we have that lesson where one divergence doesn't kill it, or maybe coming from 1-to-1s doesn't kill it. So take those no trade pictures, drop them in the room. But when you're looking for that feedback, give me that one that shows me the large chart, small chart, and describes it. Thanks for that lesson, Dark Horse. That was really good. And now I'm going to back up a little bit and go back to where we were. There's 3 things that you need to know before you're not on simulator. Guys, when you're not on simulator, man, go crazy. Bull in a china shop. Just make sure you're annotating. You need to know why you're going to enter. Those are your rules, right? Why am I going to enter? Because I have momentum, path, and entry area, and these rules are a pattern, and this pattern has been proven to win more than it loses. And guys, you should do the work. You should assume that I'm absolutely full of beans. Maybe I have a drinking problem and I show up to teach this class because my brother owes me money. You should go back and circle tails. You should look at these patterns. You should study these patterns and you should create that confidence. You should prove that they win more than they lose. I know they do. You need to know they do. And you have to understand that your process yields the results. Adherence to the rules, that's what produces the results. It has nothing to do with your upcoming bills or what your kids want. It has everything to do with trading the pattern that wins more than it loses, because it's nothing but advantages. And then why you will exit is when those advantages are gone. After you enter the trade, your exit is literally the advantage of the entry area being gone. That's where that stop 5 ticks below. Maybe 3 divergences print. When you're in that trade and you know that's a termination condition, you don't trade into termination conditions, and that's an exit condition before your targets are reached. So the cool thing is rules help remove the emotion, because rules have been proven, right? And rules keep you from having to know what's going to happen next. People love to say, I wanted to start with a winner. I needed to start with a winning trade. I wanted to make sure that I won my first trade so I could have that cushion. Guys, you'll never know whether you're going to win or lose. You can only know that you followed your rules. And one of the things that I like to point out, and let me make this smaller so you can see more things, is if I'm in a trend trade, a high probability trend trade, there's a very specific set of rules that I need to know in order to take that trade. When I add the second trade, now I've got to commit a second set of rules to memory. And if this isn't just automatic, I'm likely to confuse the two. And guys, that can be detrimental. When I begin adding momentum trades, HVA trades, guys, it's more to think about. And each trade has its own management plan. So even more so, not only am I now taking all of these different trades, but they all have to be managed differently. Got to make sure I'm not confusing things. That's where simplicity pays results. Look at all those things. And it looks like it did eventually break, didn't it? Pretty cool, right? Well, they're still trying to break it. And now there's 2 divergences on a 50-50 trade. Crazy. What else am I going to give you guys? I dropped the zip file in there, guys. I'm going to do it again. Take this, download it, build a folder for it. That is everything that you need. That was the promise, right? Before we got out of this day, you would have everything that you needed to be successful with the software. Well, now we've learned the rules, and you're going to learn them continuously. We have broken them down individually, exactly what they look like, exactly where to find them. You have exactly what you need to study them. And you know exactly where to put those pictures for study. And a lot of examples for you just to make sure you're doing it right. You do have the ability to simulate. And simulating is great. But guys, this learning path for you, the power of the education room isn't your simulation, but rather knowing what you did right or wrong as you try to grow with the software, knowing where mistakes were made, knowing where victories were had, guys. And it's the feedback that you get 15 hours every week in this room. That's what's going to take you next level. And then you've been given a plan. You've been given pictures of people following the plan. You've got everything that you need to be successful, guys. The only thing that you don't have is the experience so that you can recognize these patterns in an instant. The only thing you don't have is the repetition to put you where you need to be. You're still working on getting the feedback. And this is the last thing that I'm going to give today. And I like to do this before the second half, because the second half is nothing but feedback. The second half is nothing but your pictures and feedback. And every time you post in this room, you're asking for feedback. Some of you, and I love this, some of you post in this room because you want to say, hey Mark, check it out, I'm pretty kick-ass, look at this winner. I know it doesn't fit any rules, but I made money, isn't that awesome? I'm still going to go to your chart, and I'm going to talk about momentum path and entry, and you're going to have to listen to me tell you how there was absolutely nothing that I teach happening on that chart, but congratulations, you had a winner. Is it a winner that's repeatable? Is it a winner that's going to contribute to long-term success? Or is it a pattern and a rules break that's going to contribute to long-term failure? Guys, I'm going to talk about it, so be ready for that on the show-off trades. I do love the show-off trades, but I will give feedback. The whole key to everything that we do, guys, it's having a foundation. It's building a foundation. It's understanding the very simple things that will take you to more complex ideas. So for you new users, I blanket you with very conservative rules. Recognition of advantages, a solid plan that optimizes your chances of success as you learn to read the indicators, guys. So for you new users, it will feel like all termination conditions are bad, that no momentum is horrible, that not having the perfect entry is like shooting yourself in the foot. But the reality is, these things aren't always horrible once you understand the advantages and how to manage around them. But by blanketing you with these conservative rules, we are increasing the likelihood of success. We are increasing the likelihood of developing confidence. And honestly, guys, by keeping it really simple, I'm betting that you're not going to go anywhere, because you will find that success. You will see the potential, and you'll understand that all you have to do is learn how to use the software and use it to help you towards your goal of financial independence. So just like anything, the more time you spend with the software, the more things you see, the more patterns you recognize, guys, it's going to open doors for you. There are more trades. The high probability trend trade is not your only trade, it's your first trade. It's not your get rich trade, it's the learn how to see your get rich trade. This is your foundation. So learn the process that yields results, and the results seem to follow. Focus on the execution, not the result, and the results seem to follow. That's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, and you're okay not keeping up with the Joneses, you're okay not taking those other trades that you see in the room that don't fit the rules initially, you can find an extraordinary level of success. And I've watched it repeatedly over the years, guys. And the further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. I will bet my last dollar on that. The further you get away from simple, the more difficult it becomes to get to where you want to be. So question everything. Everything. If you think I'm wrong, tell me. I think you're wrong, Mark. I don't think you did that right. We'll go back to all the lessons, and I may be wrong. It has happened. It will happen again, guys. Been married almost 28 years. I'm accustomed to being wrong. I want you to question everything, and I want you to learn, but I also want you to give yourself a little grace, because you are brand new, right? You are a freshman in college, and you can't wait to be an architect and build a building, but nobody's going to let you build that building your freshman year, because you'll kill people. So learn the basics, guys, and keep that in mind as we go into the second hour. And normally I go in order, but Dark Horse, welcome to the room. Let's show what the next hour is going to do. We're going to take a look. We're going to talk about what you see. We're going to talk about what you did. And we're just going to see how it worked out for you. So let's see. 13-2, 5-1. Why do you have two 5-1s? And even more so, why are they different? Different time frames. Let's see what you saw. All right, cool. So check this out. Let me show you a cool picture real quick. And I see why you did what you did. But there's a big gap in between. Let me go to the spreadsheet real quick. And this is why. This is why I want you to think about this. These two charts right here, I can see a strong top. I can see odds favorable momentum. I can see potential to break. I can see the entry. I can see everything that progressed throughout all the way to the exit. And what happens is it keeps me from getting confused. And I know that I'm not supposed to be confused. But what I see here and what I see all the way over here, and this could all be captured in one picture, and it just makes it easier. And I apologize for being a sissy, but it really does. No, you're okay. So let's look at it. Notice small trigger turn, rejection at divergence, watch for trigger alignment. I love that. So price reaches a termination condition. It reverses the market. There's your strong top. You're about to see how simple my brain works, Dark Horse. You're going to love it. And you're very thorough. I like that. My guess is you were probably an engineer. So that's a term. Yeah, I can tell. It's okay. And I'm going to tell you right now, as an engineer, you're going to have to learn to let go a little bit, Dark Horse. But it's okay. Now that I know you're an engineer, I'll know that you're going to ask me more thorough questions, and I'll be ready for you. So there's your termination. No more short trades. That's all that means to you. There's your reversal. There's your strong bottom. So this is perfect. You watch the market hold. You watch the triggers roll. I absolutely love it. Yeah, I see everything. So let's talk about trigger reversal alignment for entry. My favorite thing in the world is you use the word strong triggers, you use the phrase clear path, and you use the terminology entry at an area inside of triggers. Because I want you to see something. On this particular trade, and this trade won. Well, that one didn't. And this one didn't have momentum yet. And this one traded directly into resistance. Do you see it? And you didn't have momentum yet, and it traded directly into resistance. We broke the first two rules on the first one. And I'm thinking maybe you knew that. Maybe that's why you jumped ship so quick. And that's okay. Your second one, I want you to see something. This was the fib that could have been trouble. This one, you got above that fib. You got above that trouble spot. That's okay. No, have fun. Do all of this stuff, Dark Horse. And you'll realize that I've been doing this for so long and I've seen so many people do this that I'm going to get into your brain a little bit and I'm going to know what you were thinking. This one, you said, wait a minute, let me get above trouble. My triggers are starting to crank. I'm going green, and you get in above trouble. And you trade directly to trouble. And this is beautiful because I want you to see exactly what you did. You let a termination reverse the market and create momentum. You let price get above the Fibonacci area that could have been trouble. And you didn't take a high probability trend trade. What you actually did is you jumped in with momentum above the trouble spot and you rode that momentum all the way up to the next key Fibonacci area. And I know we're on day 1 or 2, but this is exceptional. And you'll see Ron C., who told you I have a Ouija board, take virtually the same trade. And it's called the chili dog trade, where you don't wait for that pullback, but rather you embrace momentum and path, and you ride that mofo all the way up to profits. Great job. And for those of you that are new, this is exactly what we're going to do. This is exactly what we're going to do on every picture posted in this room. You're welcome, Dark Horse. And I want you to ask yourself, is there any way I could get this level of feedback every day and not end up where I want to be? I don't believe that you could. Unless you refuse to listen. And then, you might be like me. I'm pretty stubborn. Great picture, great post, great annotation. Learn to simplify. But I love it. You nailed it. Nailed it. All right, guys. I'm going to take 5 minutes. When I come back, we're going to get into that second half of class. Oh, man. Abdulaziz, it's great to have you back in here. And, guys, you can do that anytime. You'll get to the point where you don't think you need me anymore. Come back in, get a refresher, drop a couple pictures, get a little feedback. This class is for everybody. This class is for beginners, for veterans. Just remember, tell me what you see. And we'll get to where you want to be. I'll be back in 5, guys. All right, guys, we're back. Man, I want to take a picture of this before we start looking at pictures. This is what just happened in crude oil. All that momentum into an area, potential to break. I want to show you something. When we talk about why rules, why a plan, and when I use the phrase designed to optimize your chances of success, guys, I want to show you this. When I use that phrase, optimize your chances of success, it really means that I have done a tremendous amount of study, and from that study was able to come up with a set of rules that typically give you the best chance on these trades. So this is that 50-50 trade. From a strong top or bottom is very important, which means, was there a termination condition that reversed the market? And we've got this one, and that's a good one. Odds favorable momentum on the 13-2. We had that. It can't even be a 50-50 trade if you don't have odds favorable momentum. Smalls must be outside of the large on the 5-1 because momentum is momentum is momentum. And guys, there's those weak triggers, small inside, and that's a no. And then it says no divergence on the 5-1. And we absolutely had divergence on the 5-1, and that's a no. And guys, you're batting with only 50% of your advantages on what's already a medium probability trade. Learning these very simple rules, following these very simple rules, it'll keep you out of trades. It'll keep you from taking that long and maybe making $100 every now and then. But it'll also keep you from giving it all back when the advantage is gone. So I wanted to show that because I think that that's pretty cool. And there's a lot of times where simply sticking to that checklist is going to keep you out of some avoidable trouble. All right. I'm going to backtrack a little bit. We had some after class yesterday, and this was great. Wayne was giving an awesome lesson about how he uses buy stop ends, sell stop ends. When his entries aren't perfect, instead of just hoping things work out, he'll force the market to kind of bounce and go in the direction of his trade. That was an awesome discussion yesterday. I love that phrase, when it's not perfect. When it's not perfect, it's okay to wait for a little confirmation. It's okay to force the market to go in the direction of your trade. This is a good one. Jen had odds favorable momentum, and Jen had a clear path, and everything was met on her large chart. And that's a beautiful look on the large chart. And Jen said, but my areas are not inside of triggers. That area that I'm looking for, that's not inside of those triggers. That's on the wrong side of the triggers. That's where my advantage is gone. So she said, I'll tell you what, if we get to that area and it goes in the direction of momentum and path, I'll take that trade. I'm willing to pay 7-8 ticks for that confirmation, because what it does for her is it gives her a place to put her stop below that reversal bar. And sure enough, the large chart wins and it takes her right to profits. And Jen, this was a beautiful trade, and that is a perfect example of how to use that confirmation bar when maybe the entry chart isn't perfect. So nicely done there. Not a lot of pictures this morning. We're going to have to talk lots. All right, Pete. And then Dark Horse, you'll recognize this one, I think. There's that strong bottom, termination, reversal, awesome. There's that momentum, awesome. Getting to the other side of trouble, amazing. And taking that quick profit, just riding that momentum wave. Pete, this is absolutely beautiful. And then I want you to see what he did. Pete did the same thing on the way down before it reached Fibonacci support with all that momentum. He did the exact same thing down to the point that could create a bounce. And that's pretty outstanding. Quick tick, 12 ticks on 8 contracts, it looks like, maybe 6 contracts. And then another 11 ticks on 4. Guys, look at that. That's $1,800. Bingo, bango. Momentum and path. Momentum and path, guys. I can't stress it enough. Momentum and path. Thanks, Pete. Great trading, dude. And go in both directions. And guys, you're going to see people in this room that are freaking amazing chart readers. And you're going to see them doing things that you don't quite understand. It's okay to ask how or why. It didn't work. Jen reminding us. Some days you're the boot, guys. Some days you're the boot. And some days it feels like you're the butt. This is one of those times. Odds favorable momentum. Everything says up. Market is screaming. Jen called her shot. She said, I know right where the market needs to go for me to take this trade, for me to go long, for me to ride that wave of momentum all the way up to the key Fibonacci area. And they just didn't get her. Jerk faces. Sometimes they don't. And one of the most common questions, well, where's my entry? Where's my entry? If it didn't hit my order, where's my entry? Yeah, I bet you did. Guess what, guys? The answer is you don't get one. That's not your money. And this will happen. And if she had chased that trade, she would have chased it right into Fibonacci resistance. Jen, this is one of those pictures that's awesome because it reminds you that not every dollar is your dollar. And in markets that trade billions a day, oh, Pax, I want you to ask all the questions. Just type them right in the room. I promise I will get to them. I don't ever want you guys wondering anything. If you have a question, I want to see it, I want to hear it, and more than anything, I want to answer it. All right, Philip Cox. Strong triggers large chart, placed a butt at 75.83, a buy at 75.83 and 75.96. Played tightly because hit my higher target first and lower target second. Stopped out 75.97. Nice. So Philip Cox says, check it out, Mark. Strong bottom. You didn't even have a strong bottom. Potential to break. I'll take the perfect entry and manage it tightly because that's how I'm going to make money in this world. I'm going to get into these medium probability trades. And I'm going to manage them assertively because I know I'm missing some of the advantages that I look for. Philip, great job. Great management. And way to kind of make something out of nothing. Your next two links, Philip, are stuck together. Would you mind reposting them individually? Are you still in here? Let me see if I can copy that. It's hard to copy links straight from. Hold on, maybe this will work. No, it won't let me paste out from outside of the room. Sorry. Good stuff. Hey guys, that's all our pictures. That's it. Look at that. It never broke. Thank you, rules. And guys, look at this. Now I don't have a clear path up, but I also don't have a clear path down. I don't have momentum up because my small triggers are red. Do you see how rules 1 and 2 are not met right now in the moment? I don't have the advantage of momentum. Nor do I have the advantage of a clear path. So I'm going to choose to do nothing. All right, so Pax says, okay, what do I do after I took a trade after 2 green bars and made some money? Then when it's staying in the middle of the red resistance and blue, how do I trade? So Pax, what color am I thinking of right now? What I need you to do, what I really need you, nope, not even close. I went with chartreuse to make sure that you would never guess it. So I'm going to give you Dark Horse, I don't know any way to set alerts. On your phone, you can. I use one to wake up most every day. You actually have to watch your charts. Yeah, no worries. That's the thing, guys. We don't generate signals. You guys follow rules. It's pretty awesome. So, Pax, I can't answer your question because I have absolutely no idea what you're talking about. I'm very artsy-fartsy, and I have a killer imagination. And I can rarely follow a description of a chart and get a clear enough picture to give you any sort of feedback that's worth a darn. But you have Capture software. It's downloaded when you get the software put on your computer. And if you go to your search bar and you type in TechSmith, that's it right there. Open it up. And I'm going to show you how to get your question answered and how to get it answered well. Take a picture. Hit that capture button. And then from the top left corner, you're going to hold down your left mouse button and you're going to drag it to the bottom right corner. And when you release the mouse button, it's going to let you take a picture. So this is how we're going to talk. This is how you and I are going to have a conversation. This is how you're going to get the feedback that you need. So we'll use these circles as an example. And you can click and drag arrows. I click and I can make a huge arrow, a short arrow. I can make it go anywhere I want. And then once I release, boom, I'm good. I could do a shape. Maybe we'll do a square. Same thing, click and drag. Guys, this is such a good lesson. And then there's the call out button. And that's click and drag to build a box. So I left click and drag down. I have a box. And watch this. I'm going to type in strong triggers. And I'm going to type in clear path. And what this does is I'm telling Mark, I'm acting like I'm not me. Psh, you better believe I will, Dark Horse. Let's start from the beginning. So there's capture. And it's just a giant big red button. And it says capture, which makes it even easier. And guys, capture, just so you know, is the no bells and whistles version of Snagit. You'll see me using Snagit, but capture does everything else with a few less options. So once I click capture, click capture, I can do this. And I hover over one chart, it'll only give me one chart's worth of information. But since we are two chart traders, since we rely on a large chart and a small chart, guys, left click somewhere in the upper left hand side of that small chart or that large chart, drag it down, and then let's drag it over. And then once you release the mouse, it gives you options. You can capture an image. For you guys that are getting a little more advanced, capture a video. When you take a trade, capture a video and talk through it. You will be floored at what you say. That's a lot of fun. We're going to do an image. So once I capture the image, okay, how did I open it? I just went to TechSmith Capture and open. So you might need to search for it. You might need to type in tech and it should come up from your apps. There you go. So everything is click and drag. Arrows call out shapes. So I'm going to draw arrows to my rules being met. Strong triggers, no terminations, and then I'm going to click and drag and I'm going to put that on there. And I'm going to, this way, if you put wrong, strong triggers, no terms, right? What am I going to do? I'm going to look at your chart and make sure your read is correct. If it is, awesome, virtual high five. If it's not, guys, I have so many pictures and so many things that we can give lessons to make sure that we fix your chart read. You're going to show me if you entered here and exited here. You're going to tell me why. And this way, what I can do is we can talk about it. We can look at the advantages, we can look at the entry, we can look at the exit, and maybe it's like Jen's where it said large chart rules were perfect. I didn't get an entry because it didn't get to the area. Even this right here lets me know that you know exactly what you're looking for. You know exactly where you're looking for it. And you were cool not chasing it because your rules weren't met. And guys, that's huge. That's a victory that I love to celebrate. Once you do all this, click the copy button down here in the bottom right. Paste it in the room. Let's have that conversation. Let's look at what you did. Let's talk about advantages. Let's see if there was a way to do it better. And then click the upload button. And the upload button sends it to the cloud. It sends it to the screencast cloud. If you copy that link, it goes to your clipboard. You could also drop that link in the room. Either one works. You can copy paste, you can drop a link. Doesn't matter to me. But this link is gonna become very important because what you're gonna do is you're gonna open up that spreadsheet that you have. And you're gonna take that picture and you're gonna drop it in there and you're gonna be able to come back and study it and see what was going on. If it's staying between 15% and 21%, and 21% past resistance. So you're asking, what do I do here, right? Pax, I don't see a trade there. I don't see anything to do. Do you know? And watch this. Watch how agreement pays dividends. Your large chart, large triggers are up. Your small chart, large triggers are down. You can't go short, it looks like, but nothing says go up. So if you just arbitrarily jumped in somewhere right here, I have absolutely no idea what you would do there. Does that make sense? But watch this. Hold on. If you show me this picture, and you say, hey, Mark, check it out. Support held and things were rolling, and that's where you got in. You got in somewhere right in here. Then I could say, Pax, let's talk about it. This is a beautiful termination condition, and things were starting to reverse, but they haven't really changed direction yet. And typically, your highest chance of success is going to come from a little bit of patience. Let your charts agree, and then look for your entry. And sometimes we enter trades maybe when we shouldn't be in them. And sometimes that's the feedback you're going to get. Everybody believes that every move is their move, right? Hey, Mark, how did I get into this short trade? Well, there might not have been rules met. And maybe there wasn't a trade where I can find enough advantages to make me feel good about it. And I don't mind telling you guys that. But see how the triggers don't agree and it waffles, right? But when everything agrees, that market seems like it wants to go up. And when everything agrees, well, that market goes down. And guys, this is a huge advantage. When everything says up, that market's more likely to go up. So sometimes we just have to wait out the transition and wait for the best of the best. Great question, Pax, and welcome to the room. And welcome to Nexgen. And this is what we do every day. But when I talk about trades, we always talk about advantages. We always talk about 3 advantages. So don't be afraid to literally use the words momentum, path, and entry every time you post in my room. Don't be afraid to show me start to finish, what your read was, everything. The more information you give me, the better my feedback becomes. Good stuff. All right, Ms. Jen. Mark, my question is this. The backup price clears trouble here, but the large are not through. With chili dog trade, should the large be through, not a 50-50? I like the question, Jen. So let's do this. And you're going to love this, guys. And I am such I am such a sinking stickler for language. And Jen, tell me if I have rule number 1 right. And you chili doggers help me out with this. Rule number 1 says the back of the price bar must clear trouble. Is that right, Ron? Jen? So it doesn't mention triggers because triggers are a trend trade rule. And if I start to take too many trades before I can't type, I'm confident in one, I may confuse stuff. I love that question, Jen. Do you see how you took your trend trade rules and incorporated them into your chili dog? Totally normal. Totally normal. So remember, what does your rule say? Your rule says let the back of the bars. Yeah. Price wasn't past the divergence, and that matters. Absolutely. So maybe, Jen, there is a 50-50 trade to be had. And can I compound a little bit on that? Can we go into another lesson? Love this. So the difference, right? Your chili dog trade doesn't happen until all the way up here, when the back of price clears. But what if you got a pullback? You might get a trend trade in there. And what causes that pullback typically? Some sort of fight right at a key area. So I love the 50-50 because it means that the sellers may push down, may get me into that trend trade. And with the absence of this line and that straight path, that's where the chili dog comes in. And that's why you have to let it clear the path, or why you have to let it clear the back of the line, because you start seeing those bounces come off of them. And that's the beauty of having both of those trades in your arsenal. Pre-chili dog, I may get a trend trade up to the next area, right? Or I might get a chili dog a little earlier coming into it. I love that picture. I love that question. It's like Sunday school. It always goes back to the same answer. Always, always. Oops, Philip, I almost missed yours. My apologies. I'm glad you asked too. All right, so there's that 50-50 again. Went for another bite. Large sharp trigger strong, but closing played tight. 76, that's a lot of numbers. 76.12, 76.07. I'm assuming those were your targets. You got 88 out of it. Out at 88. So you got in, and when the divergence printed, you exited. Great management. Great management, Philip. Medium probability trade. Manage assertively. When your advantages go away, don't be afraid to exit, right? Isn't it always better to exit with a couple ticks than to hope and lose a couple points? Once you're a chart reader, you'll do that. And Philip, you are putting on an absolute clinic. Understand the advantages or the disadvantages, manage appropriately. You had those buys in case of a runaway? All right. I just don't care if the market runs away. You'll get to that point, guys. You'll get to the point to where you're not phased when you don't get your entry because you know another one's coming. You're not phased if a trade doesn't work because you know another one's coming. And the more you go through this, the easier it becomes. All right, so let's see what you're doing, Steve Diego. Strong bottom. Not odds favorable because your large triggers are still down. So, does that make sense, Steve? Your large are down, but your smalls are up. It's not odds favorable because they have to match. But what do you have? You have a termination condition that gave you the strongest small triggers you could ever hope for. And then Nexgen started teaching this trade. I want you to see this, guys. I'm going to show you a picture. What Steve did is he went long right at those small triggers after a termination. It looks a lot like a trend trade. Oh, Trump talks in 2 minutes. Right on. And Steve, what you did here, absolutely. Here, I'll tell you what, Pax, here's a zip file with everything that I've given out today. The rules, how to study them. Here's the spreadsheet that you can study. Everything that you need. And guys, let me give you one more. I didn't give this one this morning. I wrote this last weekend. That's the high probability trend trade. How to learn it as a brand new user in 2 pages. It's as simple as I can make it. All you have to do, Pax, is either download them, hit the download button, it'll go to your download folder, or you can literally click on it with your left mouse and slide it over to an open spot on your computer, or drop it directly into a file. All right, so Steve, what you did here, and I love it, you said with divergence, waited for a reversal candle, long off mid-band flat, favorable left triggers, not a 50-50, just a momentum chart read off the 34.5. I agree. And the trade that Steve took here, and you want to talk about things that repeat themselves, things that are timeless, and that's kind of what we do. Steve, you took the perfect edge trade that Nexgen started teaching 2004. That was the plan back then. Let Fibonacci hold. Let the small triggers roll. Buy or sell a pullback. In your execution, let Fibonacci hold. Let the small triggers roll. Buy a pullback is absolutely flawless. And you kept it a little more conservative because of the divergences. Great trade, Steve. That's some old school knowledge breaking through there. All right. Strong top. Maybe not. It is 50-50 though. Not a strong top. It's not coming from a termination condition. But it is a 50-50 trade. You do have a divergence on the 50-50 trade. Even with this mismanaged trade, stop should have been 2 ticks above synthetic triggers, absolutely. But with 50-50 with divergence, wait for the reversal. This is a needless loss. Man, great annotation. You took the entry, and it pushed through a little bit, and it got you. And then you took it again, and it was pretty easy. And this is one of those ones, a little confirmation goes a long way. Man, Inauguration Day, Ron, I don't think it did anything either. And he's probably just now starting. He's long-winded. Great recovery, Steve. Great recovery on that one. I like it. All right. Let me make sure I'm not missing anything. I didn't miss anybody's, did I? I always miss one of Pete's, so I want to ask. Jen, you could probably go to YouTube. I think mine gives me a little news section somewhere. I don't know. There's all the different streaming. Good stuff, guys. The anticipation is killing you. So what do we have right now? Let's just talk through the chart read. So brand new users, play along. Rule number 1 says that I have to have strong triggers, that I have to have a market where the odds are favorable for it to push down. What do you guys think? Do I have strong triggers? Smalls below the large, large or wide, scissors are open, space is there. Do I have strong triggers? Is rule number 1 met? Nobody knows. Okay, that's all right. So Jeffrey says no. Cool. That's what I needed to see. I need you guys to play along. Otherwise, I just look like a jackass talking all day long to myself. Pax, perfect. Yes. Jeffrey says, Novak, I'm going to give you a lesson to be able to teach. And check this out. Strong triggers is the same look no matter what. And since we're in a downtrend, let's do a comparison. Smalls below the large, larger, wide, space between. Smalls below the large, larger, wide, space between. Guys, that's strong triggers, 100% per the lesson. This is why I ask. But watch this, and let me show you exactly what Jeffrey was thinking without having to look in the room. So, okay, Jeffrey says might be gap theory. Jeffrey, does gap theory have anything to do with momentum? And you right now, no. So guys, when you ask yourself, do I have momentum? Focus on momentum. That's it. Rule number 1. So let's do it. Is rule number 1 met? What do you guys think? Hell yeah, we have strong triggers. And now we have to say, is rule number 2 met? Do I have a clear path? Oh man, Steve, I hope you feel better. So price reached the fibs, right? That's the first part. How do I define a clear path? Price reaches an area. Why is that so small? Price reaches an area. Where are my triggers? Guys, there's 3 options. Your first option is no triggers through. It's a term. But the small triggers are through, right? Small only. It has potential. Not clear. And the third option is small and large through. Clear. And this is the same every time. So let's look at it. My small triggers are through, but my large are not. So I don't have a clear path. What I do have is the potential to break. Does that make sense, everybody? This is your flow chart. We've already established momentum, but we can't say we have a clear path. So right now I've already given up 33% of my advantages. If I have an entry area, this could be a medium probability trade if my rules are met. Let's go back and look. Let's take the picture. Well, there's divergence. So I know that this one doesn't fit the plan. But look at the triggers. Price could retrace to these triggers all the way up here. Price is already through those triggers, but look how big that potential retracement zone is. Just going off the very basics. Price could bounce on any of these. That's a lot of indecision on a medium probability scenario. You see it went past the resistance with the blue line, so I would wait until it goes back and at least 2 green bars or 3. Pax, I don't teach anything that says wait a green bar or 3. I just don't teach it. What I teach is identify momentum. If you have it, define your path. If you have it, define your entry. So I don't know how many bars are going to print to an entry. But what I do know is that price may retrace to these triggers, and it keeps me out of this trade. This was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We're on the 14th bar on your small chart. Your large chart is still stuck on the same bar. This is why we use the refinement process, but this is why we identify momentum and path first. Does that make sense? It's always momentum and path first, and if my rules are met, then I look for an area inside of triggers. I don't have an entry. So not only do I not have a clear path, I don't have a rules met entry, and guys, this is going to bum you out to no end. You just don't have rules met for a trade. You don't have any rules met for anything that I teach in this room any day. Now, if you're reading your indicators, you may create a rule sometime, but if that's the case, you need to show me a picture, you need to write your rules on it, and we'll talk about it. Does that make sense, Pax? Not every move is a trade. Not every tick is an entry. Not every break is an opportunity. And right now, we're just in a little bit of a holding pattern. We're just waiting for those advantages. We're waiting for that opportunity to give us the highest chance of success. Some days, if you would write that down and send it to my wife, that would be amazing. I'd owe you one. You got to remember that 90% of your day, ladies and gentlemen, 90% of your day is a whole lot of nothing. If you sit in front of your computer for 6 hours, you might trade 36 minutes of it. Probably less than that. Most people are in a trade a minute to 2 minutes. But I'm going to tell you right now, once you start to come to terms with these ideas and these processes, you'll realize that it's nothing short of kick-ass that you knew where the retracement was most likely to happen. You knew that price could go up here because you studied those rules, you listened to them, you committed them to memory, and because of that, you didn't just jump in at these one-to-ones. You didn't just jump in at a mid-band. You said, man, that's way too much risk for me. I choose to do nothing. I choose to wait for it to be better. I choose for it to be a better entry with a higher probability and more advantages in play. And I'm telling you guys, you will get to that point. And that's what we do every day. So keep asking questions. Whoops. Our momentum is slowing. There's no space between the small and large. And we know that it takes momentum to create a 50-50. So my path isn't clear, my momentum isn't strong, and there were absolutely no areas inside of triggers. And guys, look at the reaction from the market. Who went long at that mid-band thinking they were gonna make something happen because they didn't catch it all the way up? Anybody? Some of you went long up here and got out at trouble. Did anybody decide that the market owed them a long because they didn't get paid on the way up? Guys, your rules keep you out of this trade. Your rules keep you out of this loser. You went short, Pax. Show me a picture. Show me both charts. Show me both of your charts. Take that TechSmith capture, grab that picture. Snap it. Give me a square. Where did you go short? Where on this chart did you feel like you had the advantages? And Pax, I'm going to break you of this habit, my friend. I promise you I'm going to break you of this habit. Have a conversation with me on your chart. I need you to have your conversation here with a visual and some arrows. My imagination won't let me see what you see in your head or on your chart. I need this visual to give feedback. And let me show you why. And I'm gonna drop this in the room. Because the phrase was, I can tell by the cross the lines did. Well, how many places did lines cross? They crossed here. They crossed back here. I crossed over some lines here. There was a crossing. There was a crossing. There was a crossing. Another crossing up here. This is where they crossed through those. So just by the language, this is what my brain does. Holy shit, which one does he mean? But if you said, you know what? When these lines rolled, well, Jen, it was also crude oil inventories at 11 a.m. Then I can give you some great feedback. So there's crude oil reacting to whatever happened in the inventories, I suppose. We have momentum directly into a termination condition. No long trades. Termination appears to be working. Termination worked. Now I have momentum. There's my pullback to an area inside of triggers. There's my reversal bar. There's my profits. Holy shit, that was easy. Pardon my French. What do you guys think? If you can't read them that fast, you miss the trade. I decided to make $220 out of momentum path and entry. And you will get to that point, guys. You remember when I said you've got to learn the looks so that they're easy? When you learn the looks so that they're easy, you will read your charts that fast. Man, somebody should write a letter to my boss and tell him I'm good at this stuff. And now it's a 50-50 with divergence. And holy crap, it's not working. Your KISS plan said that's not your trade. And you could have avoided a loser. Pretty cool, right? Morgan. Morgan says, check it out, Mark. There's a strong top. There is momentum directly into a termination condition. And Morgan, you very conveniently left out the termination condition in your deal here. Pull back. You wait for confirmation. Close on the correct side. Absolutely beautiful. This is awesome. It's a great trade. NASDAQ is a different animal. You did it perfect. I don't think you could have done that any better, Morgan. That's how you trade the NASDAQ. Look at this. You had 3 divergences. You had a textbook termination. You had a full reversal with odds favorable momentum in a market that was screaming to the downside. And you said, you know what? That's not perfect. But if I get in on the right side of all the nasty, it's going to be pretty easy. And it was. Absolutely beautiful trade, Morgan. Momentum leads the way. Momentum covers mistakes. Momentum breaks areas. So much goodness in there. And then 50-50s with divergence, well, that's not in the plan. All right, guys, what do you want to talk about? I'll tell you what, I'm going to take about 3 minutes. If there's a topic you'd like to cover, drop it in the room. I'll be back in about 3 minutes. on my microphone. I sat down and I got excited. So Pax, what you're saying, and correct me if I'm wrong, is when it goes red, you just sell, right? Are you selling a pullback? You said you have to wait to see what color it goes. I'm not sure what it is. Is it the trigger? Is it the fib? Is it the other triggers? Is it the bars? Is it the background? This is the Bill Clinton. Define it or if or is or whatever it was. So what is it? What goes red? And what line? You said, okay, that's the line. Is it the fib line or the trigger line? And I'm not trying to be a pain in the butt. What we're doing right now, Pax, is we're learning each other's language. We're learning how to communicate. This is a normal part of the classroom, but I have to ask these questions, and eventually I know what you mean when you post. But we're like on our second date, and I don't know if your glances are loving or if I just pissed you off. Morgan, I can't see your white bar. Off of this pullback to the fibs? Morgan, is that what you were asking? So if you got a white bar off of that fib, off of that termination condition, the same way if you got a white bar off that termination condition, or a white bar off that termination condition, or a white bar off that termination condition, isn't that cool? Like the language is so simple, but we all try to overthink it. Absolutely you could have, Morgan. 100% would have fit the rules. So Pax, and man, I like what you're doing, I really do. And just the fact that you will talk in the room is amazing. So 2 charts, always. 2 charts, always. And tell me on the chart. Large chart was up, but not a clear path or momentum. When the large, we'll just say, when the large triggers, or when the small triggers, identifying the piece of the puzzle, rolled down, and price pulled to them, I went short right here. So Pax, if I dropped that in the room for you, whoops, would there be any question why I did what I did? And that's why I talk so heavily on annotation. Because now I know exactly what was going on over here that made you do this over here. And I could give the feedback. You're absolutely right. Momentum was going away. That wasn't broken. You let the small triggers crank back, and you literally took a trade off that momentum indicator. And then you could show me where you took it to, right? Maybe you say, exited at 1-to-1s, or exited at midband. And now I have a 100% complete picture of exactly what you saw, where what you saw made you decide that you wanted to get in, and where what you saw made you decide that you wanted to get out. And I'm telling you, I will give you all the feedback. I will give you everything that I have in my brain if I see anything that you could have done better, or anything that could have reduced risk, and I may even ask you, so if you got in here, where did you put your stop? Right? We might have that conversation. Did you put your stop above the fibs that you were expecting to hold? Did you put your stop above the reversal bar? Did you give it like an arbitrary 15 ticks? And what happens is we get great conversations about everything that you see and do. And it's cool. It's a lot of fun because I will recognize your patterns, and I will recognize how you communicate, and I'll be able to communicate effectively. And I go through this with almost everybody. Almost everybody that posts in the room. It takes a couple pictures to learn each other's groove. And then we get it. And then we figure it out. And then it all works out. So I'm talking to everyone in the room, not just you, Pax. All right, so right now in the S&P, they're trying to build momentum. But they don't quite have it yet. There is a clear path. And there weren't really areas inside of triggers. So if you were going to take this look, that confirmation bar at least establishes risk. Because once I'm on the wrong side of those triggers, I just don't know how far it's going to go. And that's a great example of it. If you entered it at 61.28, you might have let yourself get stopped out down here. But if you waited on the confirmation bar, it cost you a couple ticks, but now you're on the right side of everything. Look at that. Geronimo. Right into a fib with weak triggers, and look what it's doing. Right into a fib with weak triggers. Pax, is that your trade? It rolls and snaps back. Let's grab hold of it. Awesome. Termination, smalls roll. That's a momentum style trade. And it all starts with that beautiful termination. And you gotta have that fast momentum. And you have to have something to bounce off of. That makes it better. But we're still without momentum, and we're still without a clear path. So if you took this trade, all of this is going to give me a lot of stuff, right? I love that everyone thinks different too, Pax, because I'm not going to lie to you. I learn something from you guys all the time. Because most of you are smarter than me. And there's a lot of great opportunities for me to just take what you know, what you show me, and man, I turn them into lessons. Sometimes we turn them into trading plans. Ron, thank you. All right, so that's what I was waiting for. So if you took this trade, I was waiting for the stop out. This is exactly how we would talk about it, guys. Triggers got through. So this isn't a strong bottom. This is not a strong bottom. It didn't reverse. Triggers got through, which means that the market has less giddy up going that other direction. The large triggers are still down. The smalls were starting to roll a little bit. And it was just too soon. With this look, with that strength in the triggers, with them getting through, this might be a pretty good look, right? But is it going to win more than it loses? Is this a trade that's going to win more than it loses? Probably not. Letting it pull back a little bit, letting these small triggers kind of ramp up and come with strength, there's ways to avoid this loser. And there you go, letting it pull back and retest, right? Getting back above, now you're on the good side of these triggers. Everything's rolling up. Support is held. And there's that opportunity. There you go. Just a little trigger 101. Straight from the manual. And then guys, do you remember that edge trade that we saw earlier? Where you get the termination and it pulls back to those fast small triggers? That's where it had to happen. Understanding that keeps you out of this one as well, which is pretty cool. And don't be sorry. Packs, don't ever be sorry for questions, for confusion. It's just a part of what we do in the beginning. There's a lot of information coming at you in the beginning. I do my best to make it simple, but I do understand that all of us are probably A-type alpha male and female overthinkers. That tends to be the average day trader. And it's hard to simplify. And it's hard to be the guy that asks questions because you're used to being the person that has answers. That was how it was for me anyway. There you go. If you waited on confirmation, it was pretty cool. And now check it out. Now I have momentum. Do you guys see it? Small's above the large, larger wide. My scissors are opening. Rule number 1 is met. All of my triggers are above the fib. I haven't reached another fib. I have a clear path. Guys, if I get a pullback, my rules say that I have to have a limit order a couple ticks above this mid-band. Do you guys see it? This is what it looks like when you decide to take a trade. Momentum, path, area inside of triggers. Does it guarantee that I'll get an entry? No. Does it guarantee that it'll win? No. The only thing I know is that this is a pattern that has been proven through my study to win more than it loses. Can you guys give me a why if you see it? I have my entry picked before the reversal bar ever prints. But Mark, what if the divergence is true? It takes 3 divergences to keep me out of the market with this look, not 2. So now we're at the mercy of the people that fight. Can they fight their way down to my entry? And the great thing is if they do, I already know where my stop goes. My stop goes 5 ticks. 5 ticks below those triggers. If I get an entry at 29.25, I know that my stop is 27.50. That's what my rules say. And we'll just see if they get me. I'm 2 ticks above that mid-band because as price pulls down, my mid-band's coming up. I don't want to miss that trade. Are there any questions about what you see? Guys, this is a great time to ask. Large chart leads the way. Large chart has momentum through strong triggers. Large chart has a clear path. All of my triggers are above resistance. I haven't hit the next area. My rules say I will activate a limit order 2 ticks above the highest point of support inside of triggers. And if I get a pullback, that is exactly where my entry is. And my stop goes exactly where the market should not. And now I sit on my hands. It's either going to give me a reversal bar, and then I'll go 2 ticks below it, or it's going to stop me out, right where the market should not go. Pax, I know where to set the limit order because the rules say my limit order goes 2 ticks above an area of support inside of triggers. And those are the rules, and that's the language every day. Rule number 3 says, when the large chart rules are met, I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. And when I teach it, I teach you to put it 2 ticks above so you don't miss the trade. And guys, they got us. Those sons of guns got us. Rat bastards. Happens sometimes. But that's the trade. That's exactly what it looks like. I'll take that trade every day. I'll take that loss every day because that's a pattern that wins more than it loses, guys. So Pax, let's go through from the spreadsheet. You'll dig this because this is on the spreadsheet that I gave you guys. Right here under the client trade section, top left corner. I'll drop it in the room one more time for you guys just in case. So this is the entire sequence. We'll go through the sequence short. For a short trade, everything begins with momentum and path. Momentum and path. Large chart says go. Step 1, wait for the reversal bar on the small chart to signal the pullback. Step 2, identify your favorable large triggers. From the top of the large to the bottom of the synth, this box shows me where the retracement is most likely to happen. After you find your triggers, find the areas inside. Fibs, midbands, yellow 1-to-1s. Your window goes from the lowest point of resistance to the highest point of resistance. Pax, this shows me where the market is most likely to bounce and continue with the trend. Once I identify that range, I'm going to activate a limit order 2 ticks below. And I'm going to hope that the market comes to me. That's it. That's exactly where it goes. And if the market comes to me, guess what? I'm in a short trade. Doesn't guarantee a winner, Pax. Doesn't guarantee that they won't run it over and then go up. But what we've done is we've given ourselves the highest chance of success. We've given ourselves a pattern that has been proven to win more than it loses. We're trading nothing more than a pattern. And if you look at these from the users, I'm going to click on a few of them. 13.2 trending up, long trades only, small triggers above the large triggers, large and synthetic, both green. Entry on the 5-1 chart at mid-band and Fibonacci support right inside of triggers. That's it. This is the exact same holy crap. That's the same picture. That's kind of funny. And I've just clicked it again. What are the chances? So if you start going through these, what you're going to find is that that's always your look on the large chart. Look at that pullback to resistance inside of triggers, Pax, and look what the market did after. This is your entry. Every time. All we're doing is we're learning this pattern and being able to say those rules out loud so we know where it goes. Here's another one. Large chart had momentum. All the triggers were below. Small chart pulled right back to resistance inside of triggers. Isn't that cool? It's the same thing. Over and over. And these are all different Nexgen users. Momentum, potential to break, pull back to support inside of triggers. Holy crap, the market went up. So what you're learning, and guys, what we do in this classroom and what I really try to instill from day one is that the idea is we're going to learn the rules first. We're going to learn what it looks like to have the rules met. And it's important that you know all three. Because once you understand momentum, it takes you a half a second to recognize it on a large chart. And then once you understand the recipe for a clear path, it takes you a half a second on a large chart to know whether or not you have it. And then guys, this is the one that takes a little work and a little bit of trust. You've got to go through that process of defining your entry area. And for the high probability trend trade, it is always an area inside of triggers. And if you embrace that language, you're less likely to make a mistake on entries. And you have to remind yourself as you learn this, and let's just type some stuff out. When all of these rules are met, this is nothing more than a pattern that repeats, is testable, and has been proven to win typically 70 to 80% of the time. And then as you develop a little trust in this, you remember that anything that wins 70% must lose 30%, or the math just doesn't work out. So if you keep it this simple in the beginning, if you let this be a flow chart, if I have momentum, then I'll look for the clear path. And if I have momentum and a clear path, then I'll look for my entry area, and I'll follow those rules for the entry area. And if I had an entry area, well then the recipe is met for a trade and it's time to enter the market. Does that make sense, everybody? So if you look at your large chart and you say, crap, I don't have momentum, it's done. The burden of trying to predict what the market is going to do is over because I don't have momentum. I don't have a clear path, once again, either directions. And it almost seems too simple to a lot of people. I had someone tell me once, they're like, Mark, can you call me? And I said, absolutely, I'll call you. And he said, and true story, pardon my French, he said, this is bullshit. Nothing this simple could work that well. True story. And I said, okay, that is my favorite phrase in the world. You'll keep learning every day, Pax. My favorite phrase in the world is Mark Novak, you're full of crap. There's no way. Learn these rules, test them. You'll be with me forever. If you don't have that green check mark next to your name yet, learn these rules and test them. You will. You won't go anywhere. And then you just have to learn to use them. You have to learn how to use it your way. Not bless your little heart. Have you guys ever heard that exercise? If you ask 10 people to draw a flower, you'll get 10 different drawings. You could give them the same pens, the same paints, the same paper, but you'll get 10 different flowers. Do it, Samuel. Because once you know, I mean seriously, once you know momentum and clear path, there's a million ways to get paid. But if you trick yourself into believing that this is a clear path, you're more likely to lose. If you convince yourself that that area is broken, you take away your advantage. Be careful with that, Pax. And guys, you can do whatever you want. I don't condone or condemn the buddy system. But I'm going to tell you right now, Pax, my brother's John Novak. This is the gallery of all the pictures that we share every day. And even though we read momentum the same way, and even though we read path the same way, and even though we have the exact same understanding of what it takes to get into a high probability trend trade, my brother is 25 years ahead of me. He's a better chart reader, even though I'm a really good chart reader. But the thing that separates and why trading with somebody is so difficult, Pax, is that your idea of what a profit target should be might be different than mine. Your idea of acceptable risk may be different than mine. Your idea of the perfect entry, yours might be right at the area, mine might be with a confirmation bar. So if you're going to buddy up with somebody and you're going to try to hold each other accountable, instead of trying to do the same thing, hold each other accountable to the plan. But that's what I'm here for. I'll hold you accountable to your plan. Once I know what your plan is, I will tell you whether or not you're following it. And if you're not, I'll help you find a way to do it better. In this classroom, it's an amazing community, and there's a lot of people that work together, but trading is essentially a solo sport. Market moving erratic and undependable. Gonna bail before I give anything back. See you tomorrow. Listen to this man. Who's he talking about? I'll do my best to make you better. Are you guys still under snow, Ron, or is it gone? Go to the beach. I'm going to play 18 today. It's been way too long. It's 49 degrees. I'm driving to the course once this is over. Got about 3 to 4 inches left. Ugh. Better you than me, my friend. Better you than me. And guys, DM each other. But remember, nobody's ever obligated to be your buddy. I get a lot of traders in here that post great trades and consistent wins. And then they get absolutely bombarded by new users. How'd you do it? Why'd you do it? Teach me how to do it. Guys, you didn't sign up with Nexgen to become a teacher. You signed up with Nexgen to be a student, to learn how to make decisions. So remember that. Everybody's kind of in the same boat. What else? We got a minute or two. Good day today. Great day.